I am Mr. Lu from Asa Software, and today I want to share with you the AutoCount Landing Cost Module. What is the AutoCount Landing Cost Module? Actually, it is usually used for costing purposes when importing. For example, if we import something for $100, but our shipping fee is $8, and the shipping fee plus other things like import duty, everything totals $8. So the item cost should be calculated as $108. This way, it's more accurate. If it's $108, because if we set our cost at $100, we might sometimes sell at a loss without realizing it. So $108 is more accurate. For this kind of costing, the landing cost, we usually base it on the subtotal. That is to say, if there are 3 or 4 products, I look at which of the 3 or 4 products is the most expensive when it comes in, and then distribute it based on the subtotal. And another way is based on its weight, the weight of all the items. If there are 200 items, each with a different weight, we allocate the shipping cost based on their weight. Because usually our shipping cost is on one invoice, right? An invoice might be $2,000, and you need to distribute that $2,000 to each item, which would be more accurate. So it's based on these 3 methods. One is the subtotal, another is the weight, and the last one is the item's volume or size. As for quantity, currently we do not support it. AutoCount does not support it. If you need it, you can contact the dealer to customize it for buying quantity. So I made an example here. An example, for instance, 3 items A, B used. So the first item is 50 pieces. 50 pieces at $10. So its subtotal is $500. The second item is 20 pieces, $5 each, so it's $100. So the third one is $10. So you see, when we distribute, we base it on the total quantity, the total subtotal, which is $1,000. That is 500 plus 100 plus 400, so it's $1,000. Out of $1,000, this accounts for $500. $500, you see, this quantity is 50 multiplied by $10, so its total proportion is 500. If the proportion is 500, 1,000, take 500 divided by 1,000. So if our shipping cost adds up to $100, then you just take $100, multiply by 500, divide by 1,000, and you get $50. This is how we distribute the $100 for the shipping cost. After distributing the shipping cost, we still need to take the shipping cost for one item. For example, this is $50. So here there are 50 items. For 50 items, the shipping cost per item is $1. Oh, $1 for 50 divided by 50 is $1. So if it was bought for $40, but its shipping cost after being averaged out is $1, then the actual cost of the item should be $11. So its actual cost should be $11, not $10, not based on the current $10. So we do a sample following this method of 50, 10, 20, 50, 40 to see if our calculated result is the same or different. Coming to AutoCount here, you see the stock item maintenance. There are 3 items, item A, B, C. So I will make a purchase invoice. Let's say I make a purchase invoice. This is under supplier A. So 3 items, item A, item B, item C, a total of 3 items. So following the previous quantity, we input it here. This is 50, then this is 10 yuan. Then the second one is put back here. Here is 20, 50, 40, 20, 50, 40. 25, then this one is 10, and this one is 40. So you see, in total, all the things we bought amount to 1,000. So we save it. Now let's look at item A. Is it costing really 10? Item A, refresh here, you see its balance is 50. Double click in, you will see a unit cost. This is the up-to-date cost. This is the most accurate. The up-to-date cost is a costing we look at when checking item cost. If we use first in, first out, there are many lines here. So it looks at the up-to-date cost, which is the most accurate. So up-to-date cost for 50 pieces, and it is $10. Now we will do a landing cost. So let's see if its costing will increase to 11. So for landing cost, we need to open that module. The module is in Tools, Program Control, Module Setting. There is a module called Landing Cost here. You need to tick it, and after ticking it, we go back to that purchase invoice. So you will refresh it. Let's take a look. So when I edit here, you will see the landed cost at the top. See landed cost, and you will see it adds the foreign charges, local charges, and duty. Duty, I will explain what duty is at the very end. So now we are doing a landed cost. So you see here it asks you, do you want it by subtotal, by weight, or by size? Usually we use the subtotal, as totals are the easiest calculation method. Then for foreign charges, if you have foreign invoices or Malaysian invoices, you convert them to Malaysian ringgit. So if you have them, you convert them, and if not, you just enter the total amount directly. Either way is fine, it's not important, as it will add the 2 together and then allocate them to each product. Alright, so if you're unsure about both, just enter 100 here. So you see it distributes the transportation cost, 50, 10, and 40. So the total here is 100. 100. This 50 must be distributed among these 50 items. So each item should be 11. So we save it. So after saving, we go back to the item section and we confirm it again, confirm this item. So you will see this costing will increase to $11 instead of the previous $10. So this method is more accurate from a management perspective. Why do I say that the landing cost module is more accurate? If we are doing accounting, you see I have two situations here. The landing cost might be a cost. Landing cost might be a cost, which means when I buy it back for 1,000, my cost is 100. So if I calculate the cost as 100, the closing stock, which was 11 just now, means the closing stock is 1,100. If it's 1,100, in the situation where I haven't sold it, I shouldn't have any profit or loss. Only when I sell it for a certain amount will I know if there's a profit or not. So another situation is that it's an expense. As for expenses, you also see that after buying it, it's 1,000. The transportation cost is placed under expenses, but my closing stock is 1,100 or 1,100. So in this situation, you will see that it also calculates to zero. In the end, the net profit is still zero. So in this situation, it is more accurate. If there is a landing cost, our closing stock will be $1,000 plus the of $100, adding the transportation fee of $100. This way, the accounting will be more accurate. But if we use the previous method, which is this purchase of $1,000, then this shipping cost, we might enter the shipping cost in the accounts payable invoice. We enter it in the accounts payable invoice as $1,000 under cost here. So at that time, you see its closing stock does not increase because the closing stock does not use landing cost. It is still $1,000. In this situation, you will get an incorrect profit loss or a less accurate profit loss with a negative 1,000 profit loss. Or alternatively, if we put it into expenses, you will also get a negative profit loss. In this situation, this is the biggest difference between having landing cost and not having landing cost. Let's test AutoCount to see if it can achieve accurate accounting. In AutoCount, you need to first enter that account key. Let's do a sample. We just mentioned it might be a cost, so we enter the account under costs. That account is 6110000. This is shipping cost. Okay, shipping charges. So here we have a shipping charges 611. If we are doing accounting, we enter them separately. When doing accounting, let me say it again, or let me put it this way. The purpose of the purchasing invoice here is just to update the landing cost. The landing cost is our unit price. So we do costing for management purposes. Our profit and loss account, if you look at our profit and loss account, it is still 1,000. It does not affect our accounting. Then after we enter the landing cost, our accounting is still 1,000. If we have shipping fees, we still need to enter those shipping fees. If it's a direct expense, you enter it in the cash book entry. If there's a supplier, you can use an AP invoice. And in the AP invoice, you can include ship forwarder, the forwarder's supplier. So this, or the supplier shipping partners, supplier, then we save it. So here the items are shipping charges. Earlier we keyed in an example. So this shipping fee of $100, we still need to enter. So after entering it, you will see that the profit and loss here is reduced. Okay, you see it is reduced by 1,100. Because we know we haven't put in the value of the closing stock yet, in the situation where we haven't sold it, we neither gain nor lose. It's only when we sell it that we know if there's a profit or loss because we don't know how much we sell it for. So to put in the closing stock, you have two methods. One is to look at the stock balance report to see its final value and then enter it yourself or enter this stock value maintenance. So now I don't want to. I'm using livestock. For livestock, I just choose the option. Here I can use livestock, all right? I'll directly use livestock. And then I'll preview the profit and loss statement once more. I need to update that stock group because for this item, I must also fill in that group and I happen to miss this step. So let me go update this stock group. So let's say this is a phone, make a group under phone. So I need to update this into the closing stock of 6,000. With this info, it can activate the livestock, but the prerequisite is that I must fill in all the items. Then, so if that item does not belong to the stock, then there is no need to fill in this group. This group is a stop group. Then we look back at the profit and loss. You ask me why it's called the statement of comprehensive income. This is new. You can change the name yourself. You can go to choose option there to switch to the old reporting standard terms. So it will change back to profit and loss. So we look at the profit and loss once again. Now it will come out and you see its costing will be more accurate. This way it will become zero regardless of whether my shipping charge is put into expenses or cost. So if it's expenses, you can also try it there is a track and then directly here, develop track expenses, then refresh it. We look at the profit and loss. So see it's still zero. Oh, in the end, it's still zero. This way, the accounting is more accurate because the costing, we calculate the closing stock here. It has already increased. This is a more accurate method. What other settings are there? So we can set its default method. We can set an import duty for each item. So like I mentioned, there's something about import duty, and we also need to pay attention to what is multicurrency, how it captures the landed cost in multicurrency. Let's look at our setting. In the tools option over there, in invoicing, there's something called landed cost. You see this calculate landed cost prorated rate by subtotal still or not. So this is its default setting. After you select it, later on in the purchase invoice, you will see where it is default checked. That's its purpose. Then when we open a new purchase invoice, the previous one was old, so the new purchase invoice will default to this already preset option. So another setting is about this duty. What is this? Actually, this is import duty. Some import duties, when importing, we already know how much it is. In this situation, we will key it in advance. And here it says percentage, which is 5%. So when you create an invoice, it will automatically capture this item. It will also calculate an import duty. So it's $20 and it will be included in the landed cost. Yes, you need to pay attention to this.
Then you see I can't get this out. Its landed cost doesn't show up. The reason is still related to weight and volume. So if it's based on subtotal, it will know, oh, the subtotal is based on this.
If it's based on the kind of weight and volume, you need to go to the item section. Each item has a place for you to fill in. In the others section, where it has the weight and size, you can update it here. After updating, it will add up based on the items you filled in, allowing you to recalculate the landed cost. Usually, it's not recommended to use this method because sometimes you forget to fill in too many items with this information, and then your landed cost will be incorrect. So, but it also depends on your business model. The last one is about multi-currency, which is when I import, it's not in Malaysian ringgit. So is the landed cost calculated in Malaysian ringgit or in that foreign currency? So we go to the tool section, first test a currency, open this multi-currency module. After opening it, we go to add a currency. So in general maintenance, this currency maintenance, then here we add a USD, maybe $4. All right, these are gain accounts, loss accounts, and then general accounts. So after filling them out, so we go to create a supplier. Suppose this is a USD supplier. So we select it as a USD supplier. Here we set the currency to USD and remember to set it to USD. So when we are in the purchase invoice, I will select this USD supplier. And to avoid working on previous items, I will just add a new item, which is an import item. So I will put it into my item. Currently, there is no cost. It has not been set at all. So let's take a second look. Let's say I order one item for $100. I order two of these $100 import items. So my landed cost is $8. So we see if the $8 is from the subtotal instead of becoming the item weight. If it becomes the subtotal, it is $108. So you see here, it's Malaysian ringgit, it's 400 because I set the rate at 4. So it's 400 Malaysian ringgit. So is it actually 108 times 4, which is 432, or is it 400 plus 8, which is 408? Let's take a look. So after saving, so we confirm that here it is 432. So the landed cost is also calculated in US dollars, which you need to pay attention to. Because usually the foreign invoice or import duty invoice we receive has already been converted to Malaysian ringgit, but you need to find a way to convert it back to US dollars. This way, it will be easier when you calculate. And then there's another situation where the landed cost is from a shipping bill, and it gives you two combined bills totaling 2,000. And in this case, you have to figure out how to split it, maybe into 1,000 each, or however you decide, and then update the landed cost accordingly. So pay attention. I'll repeat once more. This landed cost only affects our item cost, which is our management costing. But in the account side, if you have a shipping bill, you still need to enter this accounts payable invoice. And after entering, you still need to make the normal payment or directly enter the cash book entry. This account entry is not directly done in this landed cost function. Currently, it is not. If you wanted to do it directly, those need to be improved separately, and at that time, you need to contact our colleagues. So the whole landed cost is roughly that simple. If you have any questions, feel free to email us. Thank you, everyone.